The market initially perceived and took Bullard's comments this morning in stride. We were down pre-market and then we were green when Bullard started speaking. However, my interpretation is a little bit more different, and I think there's a more nuanced view that allows us to see both an economy that remains strong and a stock market that remains weak. And we're going to paint and highlight how this picture can turn out. And this is not something that we're forecasting possibly seeing in the future and we're speculating on. I'm going primarily off data we have received and are seeing right now to come to this conclusion. So, inflation, it seems, is remaining quite strong and high and not coming down in the way that some had hoped, but as the Fed had predicted. And let's keep a note that the Fed has progressively gotten more and more hawkish in every sort of period they talk between, after every blackout period, we'll call it. In Jackson Hole, that was perceived as a very strong market event. People thought, wow, Powell's talking about pain. He really means business. He's going to raise rates to, drum roll please, he's going to raise rates to 4%. We're now well beyond that 4%. We've just added an additional June hike, is what now consensus is starting to price in the Fed funds futures market, which should trickle its way to the stock market more quickly than it is, but whatever. Anyways, we're basically flat since August. We're basically flat since June. We've just been chopping around. It's been volatile. We have had pretty high highs, and we've had pretty low lows and pretty high highs. Been a little bit of that. But nonetheless, let's get into how the economy can remain strong and the stock market not remain so strong. Well, consumer spending can remain strong. Unemployment can remain low. Incomes can remain high. And certain areas of the economy will benefit and certain areas of the economy will suffer in that environment. We're already seeing this. For example, auto sales, they're coming down. They're having some weird strengths when rates are pulling back. But this area of the economy that is typically poor in a recession is remaining is beginning to weaken, very clearly beginning to weaken, and it's one of many. We're seeing consumer electronics. That was a big component of spending in previous quarters, now beginning to pull back. We're seeing, this is across various areas. Chipotle starting to show some signs of weakness. McDonald's talking about various areas of trade down. We're seeing signs of consumer slowdown, simple as that. However, in other areas, we're seeing signs of consumer strength. Walmart, signs of consumer strength, mentioned by Bullard. So, here's the thing. We're seeing areas of the economy remain strong. Walmart. We're seeing areas of the economy begin to weaken. Used car sales, higher priced goods. People making over $100,000 a year going into Walmart at a higher rate. People are getting cost conscious. They're starting to do recessionary things. So, I have to acknowledge the truth and the facts out there that the economy remains strong, unemployment remains low, consumer spending remains strong, et cetera, et cetera, et cetera. Consumer balances remain strong. I have to acknowledge that. However, I also choose to acknowledge the shift in consumer spending into more recessionary type behaviors. And it seems like the Fed is okay with seeing that. So, that being said, we see Walmart typically hold up all right in a recession. We're seeing Walmart hold up all right now. We're seeing other areas of the economy, used cars, housing, etc., not hold up so well in recession. We're seeing them not hold up so well right now. This is not speculation. This is what's happening. This is in the data. This is what's happening. And I expect it to continue as interest rates begin to go higher. Their effects continue to trickle out throughout the economy. And the unfortunate truth is inflation is remaining high. We got a pretty high inflation read last month with, yes, a run up in energy prices a little bit, but nothing too crazy. and we still accelerated 0.5% month on month in CPI after coming down in previous months. Obviously, we're almost at the end of this month. Energy hasn't done anything too crazy yet, so I think we can rest assured that energy isn't going to do anything too crazy. But it wasn't at $70 a barrel of oil this month at all. 70 flat, I'm talking, and I'm pretty sure we had that for a little bit in January, if not also December. So, some strength. We'll see what happens. But that is how I think the economy can stay strong and the market can weaken. The Fed's going to keep raising interest rates because inflation's high, and consumer spending is going to remain strong, but it's going to shift to more defensive areas of the stock market. Will that be enough to keep the stock market up? I don't think so, because it's going to come out of areas that are incredibly big, heavy, and inflated. And that will pull down the indices. So that's my take, and that's today's video. We get PCE later this week. That'll be quite important. And until then, peace out. Oh, actually, until tomorrow. Peace out.